And you are watching Your Money, Your Call. We're in the second half of the program. I do hope you're enjoying the show so far. Welcome to the program. What can we help you with tonight?
I'm just ringing up to see the future prospects for UGL.
Okay. Currently tracking at $14.70. Corgi is not a relative, by the way, I should hasten to add.
I, as you know, sold a fund. I founded a fund and I've sold it now, but we shot the lights out with returns, and we did that without any exposure to this particular company, despite the fact that many of my peers in the industry really, really liked it. Yet when I look at it, I can't see a great business there. I see a mediocre business at best, and I just don't think that, I don't think there's any reason to actually own this company when there are other businesses that are superior in terms of their quality.
Susan from Canberra is our next caller. Hi, Susan.
Hi, thank you very much for taking my call. Just a quick question. I have a self-managed superannuation fund. I don't have any gold stocks, and I had some money to buy something, and I was wondering whether I should buy Lahir or Newcrest. If the panel could help me, please.
Well, I'd like to say just give the money to me, and I'll keep it, because it doesn't sound like you're prepared to make a purchase decision yet. You need to do some research and decide yourself which is the better business, which has less debt, higher return on equity, stability of earnings, great management. There's a whole bunch of things that you need to find out before you actually make an investment. And I don't think that the right thing to do is to ring up here and ultimately make your decision based on an answer that we give you. So I would challenge you to go and do some research on those things. What you want to find is a business that generates a return on equity of greater than 20% consistently over time. You want a business that's going to generate a return on equity higher than its peers. And if it looks as though out of these two particular businesses, one doesn't rise up distinctively above the other, then it may be that neither of them actually have a competitive advantage, in which case you probably shouldn't buy either.
Let's go to John from Mackay. John, hope you got through the cyclone okay?
It was pretty windy.
Oh, I bet it was.
It was, a couple of hundred k's an hour. But two things. I just want to know what the panel thought about CCL now that they're getting into Indonesia in a big way.
Roger, is Coke it?
Gee, you'd be a great Coca-Cola girl. You could just say, is Coke it?
I was going to say, am I Lady Luck on the footy show or what?
So Coca-Cola is a little bit expensive at the moment. It's more capital intensive than the sorts of businesses I prefer. Having said that, what I'll do is if what's this caller's name, sorry?
It's John from Mackay.
John, if you go to my website, I'll let you know what time tomorrow I'll put a valuation up for you and you can have a look.
Okay, rogermontgomery.com there. Hi, Jeff.
Hi there.
Got you, Jeff. Thanks for calling in.
Thank you for taking my call.
And what's your question tonight?
A company called Dolomartix, DMX.
All right, well, let's take a look and we'll get the chart up on the screen so our viewers can see just how this one's been travelling. Dolomartix, I don't think I've ever heard this one.
I don't cover it, sorry.
Can you tell us a bit about it?
Yeah, they develop technologies similar to tox-free solutions.
Yeah, I believe it's a waste servicing company, and Tox has a great advantage because of its locations. Look, transporting waste is a very low margin business, and in Perth you have to transport it long distances if you haven't got permission to dump it locally. And Tox has permits to dump it locally. They don't have to travel as far, and so they can keep their costs low, and that gives them a competitive advantage.
I'm going to start off with Clint from Sydney. Hi Clint, thanks for joining us tonight.
Thank you. I had a question on Cochlear. I bought this stock during the GFC time when the stock price fell to mid-50s. I did a whole lot of research on this company. Fantastic company, good return on equity, good EBIT to sales percentages, low amount of debt. My question to this is I want to buy more, and the price is, if you look at the PE ratio, it looks in the high 30s, and it's not. My question was, is there still value in this company? Thinking about the healthcare reforms in US and more potential revenue opportunities for Cochlear, or is it now priced up in the stock and not much of a margin of safety?
Can I just ask one thing? You made the comment right at the start. You want to buy more. Why do you want to buy more?
I love this company.
You like the company, that's fine, but to have a great investment, you need two things. You need a great company, which this is, and I'll talk about that in a second, and you also need a great price, and I'll talk about that. This is, if I rank all companies from A1 down to C5, Transurban's a C5, Cochlear's an A1. It's just a wonderful, wonderful business, and you already know that. But your question is around the value of the business, and I can actually tell you what I think the intrinsic value of this business is. I've owned this stock for a year, a little bit longer than that, in fact, and so I actually agree with you. I think it's a good business, and obviously we've both done really well. It's now expensive compared to its value. I've got a valuation for 2010 of $49.68, for 2011 $54.11, and for 2012 $63.17. So the value's going in the right direction. You want to own businesses whose value is rising every year, and that's certainly the case here with Cochlear. But in terms of buying a lot more or any more, my suggestion would be to ideally wait for a better price.
Well, hi, Wade.
G'day, guys. How you going?
G'day, well.
That's good. Yeah, Incite Pivot. Just wanting to get your thoughts on it. I think people sort of tend to overlook that it is also a explosives company, not just fertiliser. And in Northern America, if that turns around in the mining sector, that hopefully that'll be a positive for their earnings. So, yeah, just wanting to get your... And also if Roger's got a valuation on it.
Look at this, and no Incite Pivot valuation. I'll put it on the blog tomorrow.
Okay.
Yep.
Great. Okay, thanks for your call there, Wade. We're going to go to Anne from Melbourne. Another one, Elio. Yeah. Anne, hello.
Hello.
Hello. You're chatting with Elio and Roger. What's your question?
I wanted to know what the panel thought of Alumina. I've got a lot of them, and they just seems to be sitting there doing nothing.
Their valuation is way below the share price, and look, it's for me, it's not a business that I would own, and I appreciate that this particular shareholder has a lot. You need to go back to the advisor that put you into this particular stock and ask them what their advice is for you. I don't think it should be my job to correct the mistakes of other people. So, look, this is not an A1 business by any stretch, and that would be my suggestion.
I'm going to finish the show with an email that I've received from Francis, who would like to know how you rate AWB. What factors will determine its future share direction?
No competitive advantage there.
Yeah.
You've got a business that sells a commodity without a competitive advantage. Its competitive advantage previously was its monopoly status. It doesn't have that anymore, and so the result is you may have a view that the food demand globally is going to go up, and I think that's a reasonable assumption over the next couple of decades. But this particular company is not the way to take advantage of that. You can go and buy wheat, just as you mentioned gold earlier. You can go and buy wheat without the worries about management, debt, all those sorts of things, and competitive pressures. So a difficult one. We're
going to have to wrap it up, gentlemen. Roger Montgomery from rogermontgomery.com. Thank you. He's going to be burning the midnight oil tonight, getting all of those evaluations up on your blog. You poor guy, every night you go home, and I must say, you must get stuck into that computer.